Hi everyone and welcome to today's More Report on Thursday the 14th of January with me, Richard Perry, market analyst at Handset Markets. European trading has gone off to, another disastrous start really, 2 to 2.5% down. That's actually slid away and as I've been doing my report and it just continues to fall away. The little rebound that we got yesterday certainly got sold into, didn't it? And that came on the back of the oil price sliding away again. What we have seen is the price of Brent crude actually falling below $30. The price of Brent crude actually now trades below WTI, which is incredible. And WTI is relatively actually quite settled in the last couple of days, isn't it? But Brent crude has fallen and sharply yesterday. Suggestions that we'll talk about the Iranian sanctions being lifted has certainly not helped that price. So falling away on that, and the markets have taken bit of fear off the back of that. The VIX sharply higher again yesterday. And across markets, Wall Street was incredibly weak yesterday, 2.5% lower on the S&P 500, back below 1900 there on the S&P, and incredible weakness that we're seeing. Following through Asian markets all sharply lower, 2.7% on the Nikkei, and again the European markets are following suit as well. So pretty much across the board, very weak. Safe haven trading seems to be back in vogue. The euro is finding some support. The gold price is interesting. It's not really rallied today, but certainly what we are seeing across forex markets is a relative bit of sort of bearish bias, or I should say, sort of safe, sort of risk off sentiment through the markets, and that is certainly accelerating as the European trading session has got underway. You can see here that the Treasury yields, for example, in the US Treasury yields are well below the levels that they were seen when the Fed announced its monetary policy decision in December. Back to levels not seen since October now, so sharp declines in those yields certainly reflects that safe haven trading, and that's what we're seeing pretty much across the board today. Now, we haven't got a great deal of economic data today. We've got the UK monetary policy statement from the Bank of England, and no changes expected in the decision at 12 o'clock. Could There's a possibility that it'd be interesting to see actually if Ian McCafferty, the one lone dissenting voice on the committee, if he changes and shifts back into the no change category. It would be very interesting, because if that were to be the case, then you could see some pressure on sterling. But that would be the one major shock that you'd come out of that decision at 12 o'clock. You've got the weekly jobless claims at 1:30 as well. That's forecast to again come in around about 275,000. So sort of similar-ish to the sort of levels that we've seen in the last few weeks. So no massive shakes out from that, but certainly markets are under pressure as this European session ramps up. Now, my chance today is the Aussie dollar, and we're seeing some pressure on the Aussie dollar. I sort of was started to look at this yesterday, and then sort of wrote it this morning. And yesterday the candle was fairly much neutral, and then obviously it closed quite strongly lower. Again, today's candle saw a bit of a bounce as I was writing the morning report. But then, as the Europeans have got going, it's really come away, and it certainly seems as though the pressure is to the downside. Looking at all these momentum indicators, you'd say that the stochastics are still negative. RSI sort of towards 30, that's negative. But what you are now seeing is this 68.93, that crucial September low. That looks to be as though it's going to come under pressure actually now today, and the old low of 69.24 has been sort of broken. We're now trading around the day low as we speak, so that 68.93 level, that's a multi-year low. Let's go back 10 years. You can see that that is a multi-year low. Aussie hasn't been back at these levels since 2009, and the next real key levels that you'd say coming in as to where we are is a bit of a support around 67.60, but to be honest, you're sort of coming into play around 62.80 area. as the next sort of key level of support. Those March 2009 lows, so 62.80, and that would protect that 60 big figure level of October 2008. So certainly seems as though the Aussie is still under pressure. Further weakness likely is to be seen if we break down that 68.93 level. So that would be a negative. And you could even then start to think about that this is a downside break from a range trade. That would be a continuation pattern, and from a longer term perspective, or medium to longer term perspective, you then measure the height of this range, and you project it downwards. So that's something to think about as well. So I wish you good luck in your trading on the Aussie today, and I will speak to you later.